Oh, goodness gracious. We took a bit of a holiday yesterday, but we're back. Thank you. Happy Tuesday, everybody. I hope you're doing okay.
I'm here.
Ed is here. Ed was actually what catalyzed the day off yesterday. I mean,
You know what?
We can't do a show every day.
I'm the master of my domain.
Exactly. Anyways, you came up with a good idea, which is let's take Monday off. This is Thanksgiving weekend in the United States.
You know what? That's a big football weekend.
Well, never mind that. Anybody with do-re-mi who doesn't need to work a 9-to-5er is taking this week off as well as next week.
Do you know that Thanksgiving weekend, or this weekend coming up, is considered to be a bigger holiday than Christmas in the United States?
That wouldn't surprise me.
Yeah. It's considered the,
Wonder how the turkeys feel about that.
Well, gobble.
I mean, if American turkeys really got it bad. It's like half you get your heads chopped up last week of November. The other half you get your heads chopped up 4 weeks later, Christmas time. Canada.
We formalized the idea of eating, right? Like we formalized it.
What, you mean an hour ago?
No, but we eat other species.
Instead
it's
of
the
feeding.
wildest thing.
Why is that a wild thing? I mean, that's...
Wild thing.
You make my heart sing. Anyways, but yeah, eating other species. Well, what are you suggesting, we eat our own species?
That would be cannibalism.
Well, that's an interesting name for it, but it would be fair, you're suggesting. People actually do cannibalize other people. They do so financially.
They do it in every other way except eating them. But
not entirely.
Is that like what you're suggesting? Maybe that's what they're really trying to do. Is eat them.
Eat the people. Not we the people. Eat the people.
The people.
Well, certainly the boys on Bay Street and to a lesser extent Wall Street. Although nobody goes to Wall Street anymore. It's more Park Avenue. Actually, it's more like, I don't know. Anyways, we go off on a tangent. We have a hell of a show lined up today because we've had a break, so we can talk about our crazy show. Look at that shot of outside. That is happening right now, people. If you see anybody you recognize, or if you happen to be walking by watching the show on your phone, jump up and wave. No, I don't see anybody doing that.
We had a little bit of a... Oh, did you see where... I see we're going to be talking to... Mark's going to talk about the truck, the Cybertruck.
So starting at 3:10, we're going to have Greg Engel here, who's going to talk to us about Organigram.
Okay.
And then we're going to look at Organigram's financials, you and I. You have a copy thereof on your desk.
Yep.
And we're going to try to find flaws and warts and, pustulence and pus and ooze, and then after that, Mark Latimer is going to be here, and he's going to wax poetic on the Tesla Cybertruck for 3.5 minutes.
Did you see where they shattered the glass, though? Did you see that?
I think we'll let Mark tell us about that.
Okay.
Anyways, and then we're going to look at Tesla's financials, which are on our desk, apparently.
Okay.
Then Supreme Financials, Nav Dhaliwal is here. And then we're going to look at his financials. Boy, look at us go. We're just analyzing the financials here, left, right, and center. And then at 3:48, our in-house Italian stallion, Alessandro Bruno, is going to discuss the difference between Ford versus Ferrari in the context of the grand economy.
Maybe we should have had Henry Ford here to banter with Alessandro being the Italian stallion.
Michael Andretti as well. Oh, and here's another little piece of trivia. If last week on Friday was our 299th show, and Monday was our next show, but we took the day off, what show number is today? I ask you, Ed? Ding, 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 ding.
That's what I was... that's the exact... 300. Yeah! Pow, 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 pow! Woo, woo,
Yes, indeed, folks. Show number 300. We've been doing this 300 times, and we still can't get it right. We did this 300 times. We still can't get it right. So yeah, that's our show, and
you're sticking to it.
That's the show, and we're sticking to it. Now, what else is going on today in the universe? Famous headlines. Let's start with those.
Look, the S&P is grinding higher ever so.
Grinding.
Well, you know, yesterday was a big day. Gold got hammered. Gold caught a bid.
I got hammered yesterday too. Might be looking a little flush today because I'm still hungover. No, I'm just kidding. Anyways, cannabis headlines today. 48 North Q1 fiscal 20 net revenue of 1.5 million. And whoa, get this, sit down. Are you sitting down? Stop spinning around. Sit down. And net income for the quarter was 2.2 million, or whopping 1.3 cents per share.
Really?
Congratulations to the team at 48 North. Hey, it's a positive. It's a win. It's a rabbit out of the hat in this ugly market, this ugly over-cannabisized market. Biome Grow announced Q3 2019 revenue of 1.4 million, but they lost 1.5 million, or a penny a share. Congratulations to Biome anyways, because then they subsequently raised $3 million more, so they're still in the game. Woohoo!
Right.
Let's see. Kevin Durant's 35 Ventures joins Canopy River's Strategic Advisory Board. How significant is that? We don't know, but we will have Narbe Alexander, the CEO, Alexandrian, the CEO of Canopy Rivers on the show to explain that. And yeah, that's the essence of the universe today. There's lots more to discuss, but I don't want to.
You don't want
to show the whole elephant.
You don't want to. Okay, well, you know what? Why don't we start with something light,
like shrimp chip,
like maybe like a taco.
Taco.
Something light,
like Taco Bell.
Taco.
Yo te quiero Taco
Nice
Bell.
Taco.
Yeah, we could do that. Have you eaten? Anyways, large volume traders today include Aurora Cannabis, traded almost 10 million shares on the Canadian exchange, is down 10 cents to 322.50. No, there's nothing funny about that. I realize that, except there is. But the Green Organic Dutchman, down 14 cents to 75 cents. You see a consistent theme here. These companies are starting to give back everything they gained last week.
Oh, yeah, I really think that was a technical rally. Mm-hmm. And a very oversold market, and I don't think it's gonna.
I think that's a case where it's like there were so many people just wishing that the reversal would be in that they just started buying it. They couldn't help themselves. They heard two good news items. They kicked the algos into high gear based on extraordinary volume relative to the mean, and boom, there you have it. A dead cat bounce. A new Dead Cat Bounce.
Yeah,
Anyways, I'm going to start a band called the Dead Cat Bounce. You want to be in my band, Ed? Well, that doesn't really matter to us, does it?
We don't live in Ireland.
There's a comedy troupe in Ireland apparently called Dead Cat Bounce, but
yeah, you know what?
They're over there. We're over here.
I don't give a shit.
Exactly. They're Irish, A, though nobody understands them. B, they're drunk all the time.
They're always drunk.
Exactly.
Always drunk.
So not like us. We're only drunk half the. What? Well, what? We're only drunk half the time.
Oh,
we're proper Canadians.
Yeah. Show everybody my faults. What about yours?
And it looks like you're talking to yourself. Jesus Christ.
What?
Anyways,
let's use the
side mount
concept of ventriloquism. Okay, so for instance,
I don't know what the hell you're talking
I'm going to throw my voice over there.
Ah! Anyways, it's time for some live entertainment. Here's Greg Engel from Organigram. Greg Engel joins me now, CEO of Organigram Holdings, Inc. Greg, welcome back.
Thanks for having me today, James.
Greg, it's been a tough few months in the cannabis sector, but Organigram has not only demonstrated that it's plowing forward and developing, getting ready for Cannabis 2.0, but you're also attracting the attention of a lot of analysts who are still writing quite favorably about you and have projected higher prices for the company going forward. So my question, I guess, that will build this conversation around is, what are you doing to get the analysts to put such big targets on your price going out?
I think there's a couple key things. One is we've got a proven history delivering when Rec 1.0 launched. So, and I think when people look to 2.0 launch, that's one of the considerations is, are companies ready? What's their plans? What's the strategy behind what those products are going to be? So we're very focusing on the high volume areas with vape pens as our initial launch, and then we're going to have a phenomenal range of chocolates available in Q1 next year. And then we've got a really unique offering in terms of dissolvable powder for beverages. So I think that's one, is looking at how have you delivered and what's your strategy for 2.0. I think the other is when you look at the cost base of the company. We had some hiccups in Q3, which impacted our revenue and our gross margin in Q4 in terms of production, but those trends have been reversed, and now we're delivering again. We're producing at a cash cost of 66 cents per gram and an all-in cost of 93 cents. So arguably putting us in one of the leading positions in terms of the space from a cost perspective, which as an indoor producer growing a very high quality product is a great position to be in. And I think when you look at companies going forward, costing has to be part of it. What are you spending on SG&A? What's your operational cost? But what's your cost of production as well? So I think those are two of the key things that analysts are looking at when they're looking at kind of who's ready for the future and who's going to deliver in the future.
Sure. At that cost basis, you could even afford to compete with the black market.
Yeah, I think, again, I got asked this question on our earnings call yesterday and about, who's our competition. And I look at, I don't look at the other companies in the market. There's a massive market out there in terms of, the existing illicit market. And I think the way for us to compete with them, I don't necessarily think cost is the way to go after it. I think it's differentiated products, delivering on kind of an improved cannabis experience, especially when they get into the 2.0 products. What are you going to provide and what are those products going to offer? They're going to differentiate you, because at the end of the day, that's sustainable, right? And I think products like, as I said, our dissolvable powder for beverages is a way to differentiate ourselves and deliver an experience that's different. Because with that formulation, based on the data we have on the formulation, we believe the onset of effect will be 10 to 15 minutes versus traditional edible or beverage, which is 60 to 90. And so people are going to be able to measure their effect more effectively, and then also gauge whether or not they want to take more in the 2 hours out or something. So I think that's going to be a big way to compete with the illicit market.
So then does Organigram envision not competing on price? Like Hexo announced their $4.50 price range product, which is obviously geared to go head-to-head with the premium dried flower. You're saying Organigram's strategy is not to engage on that direct price competition basis, but rather to focus on differentiated products that the black market simply won't have available.
Yeah, I mean, that's been our strategy from day one in terms of quality flower as well as, of course. And, we're fortunate we have a good partnership with the Green Solution out of Colorado. So we see, not only state level data, but we actually see store level data for what's happening in that market. And that's the most mature market in the space. And what we see is, selling an ounce or 28 grams, it's a very tiny fraction of who's buying, right, in terms of the marketplace. So, it's more important to make sure that you're delivering a product that has a great consumer experience and having that differentiated product. We have a range of products. We're certainly competing in kind of the value range, but really our core is in the mainstream and premium side, and that's where we're focused.
Sure. Have you undertaken any sort of projection as to what percentage of your revenue in the future will be derived from the Cannabis 2.0 product category? I mean,
certainly, again, we look at U.S. state data, and our understanding is that dried flower and pre-rolls and that whole side of the market still, in a mature market like Colorado, has a 45 to 50% share. So derivative-based products, primarily vape pens, as well as edibles, have a 50 to 55% share of the marketplace. So, certainly we expect, with the products, and that's why we went into the categories we did, right? Vape pens, we know, are 25% of the market in the U.S. states. Edibles are 13 to 15%, and then kind of the other categories fall off pretty quickly, small percentage points. So we wanted to compete in the leading categories, and as I said, our beverage tech is one that we believe is a bit of a disruptive technology versus the other companies who are going into beverages, because they're going to have challenges with shipping and storage space, especially in today's legal stores. When you look at those points of retail distribution today, they've got limited storage space. So all of a sudden, carrying beverages that are taking up a lot of space is going to be a challenge. But we believe with our, our dried powder that it's going to be a discrete offering where people can, take it to a party, take it to a social event, but also take it to a sporting event or a concert or anything and add it to the beverage of their choice. So it gives a lot of flexibility.
That's interesting. Do you envision that the edible segment is going to be subject to overregulation in the same way that premium dried flower was in terms of packaging and advertising and promotion?
Yeah, it's going to be a challenge. I mean, certainly what we've seen is that the packaging is going to be very similar. We're going to have child-resistant packaging, which in fact is actually more applicable, though, in edibles, right? I mean, certainly, one of the kind of confusing facts going back to Cannabis 1.0 is I don't necessarily support that we ever should have had to package dried flower in a child-resistant package, because what can you do with that product? If you eat dried flower, it's not going to have any effect on you, right? So there's no risk, but there is a risk of consumption. So having having edible products in a household where there are children, it's important to have, especially young children, having child-resistant packaging. But, the biggest challenge still continues to be our lack of ability to market and differentiate these products, right? So we're going to be dependent, as we are today, on the staff in the retail environment, and that's why retail build-out's been so critical, right? In the provinces where we've seen, retail build-out, those staff are in a position to actually talk more to the consumer and talk to them about kind of what's in the product. And I think it's going to be important. We rely, as do other companies, on online, reviews that people will make of our products, and I think that's going to be important as well going forward. So you want to deliver on a quality experience up front, and then people are more likely to post reviews about your product, which I think is going to be key.
The province of New Brunswick elected to privatize its government-run cannabis retail business, and it immediately occurred to me that, I wonder if Organigram is going to make an attempt to take over that business. Has that occurred to you guys at all?
So we're not a vertically integrated company today. We don't have retail experience, but we certainly have been approached by a number of different retail partners, possibly about doing that. So, certainly, to be frank, I think supportive of whatever plan the government wants to make. But they made a decision at a time when their retail footprint was just about to turn profitable, right? And so, I think they're in a position where they're looking to say, can we bring in a more proven retailer to kind of help us with this? But so I guess I would say we're open to participating in a partnership with an existing retailer, whether or not that's a retailer who's in the cannabis space or someone who isn't today, right? I mean, New Brunswick is an important market to us, and I think we have to consider that. We haven't made any final determination of what our plan is going forward.
The involvement of the government in the commercial sale, or the retail sale rather, of cannabis products has come under a lot of criticism by market participants, and a lot of people point to California and Alberta of examples where less government participation means faster path to profit, greater access to product in the legal sense for all of the customer base. Do you think that's a fair criticism, that government perhaps shouldn't be in the retail side of the business?
I think it's really dependent on kind of how it's rolled out, right? We've seen, the experience in Quebec is very positive, and certainly the stores that are there. Same as in PEI and Nova Scotia, where the government stores have done a phenomenal job, and the consumer experience there is great. The access to products is great. I think where one of the early concerns, for example, with Nova Scotia from a federal government was co-location with an alcohol beverage, and I think we've seen that that's not really had an impact in terms of increase in impaired driving or anything like that. So it depends on the model, right? It really depends on Alberta's done a great job, and the other companies, the other provinces that have gone with private models in Western Canada. We're seeing strong rollout and strong consumer experience, but in Atlantic Canada and in Quebec, where we've seen government participation, and the Cannabis NB stores in New Brunswick, were great stores and great experience. They probably just started with too many stores for the supply that was available at the time of launch. And so if they had started with 8 or 10 and then scaled up as more supply and the 2.0 products came online, I think then from a profitability perspective, they may have been in a stronger position. But I know you've been to the stores in New Brunswick. It's a great experience when you go in. You've got staff that are focused. They have a high level of knowledge. So for the consumer experience, it's a positive side.
Yeah. All right, Greg. Well, that's an awesome update. Thanks so much for joining us today.
Great. Thanks for having me, James.
let's talk about Aurora. Recently, your financials, you've more or less delivered on
Here are the headlines moving markets today.
If you're lucky to buy it 3 days ago at 37 cents,
And I think it has a lot to do with some of these smaller names giving really...
Recreational cannabis is here. It's quite dry. So I'm going to eliminate the stocky bits. Did you hear that Kirkland Lake Gold was buying Detour Gold?
Oh no, did I?
What am I, stupid?
It was
I don't.
my idea.
What was your idea?
No. They Kirkland Lake is generating a lot of cash. They're a producer. They got a low cost. They got high grade. Eric Spratt's biggest shareholder. Yeah, what the hell?
You know, they were our top pick in the Midas Letter in 2012 or 13.
You're a little early.
Well, not really. It was $5 a share back then.
Really?
Yeah. Could you imagine buying Kirkland Lake Gold for $5 a share? A mere $5. Like, people are pointing to this cannabis industry and saying, this is unprecedented. It's like, well, it kind of happens in the gold industry all the time. It's just that the gold industry is so crowded with failures and money pits, but that's the essence of exploration, isn't it? Digs your hole and you takes your chances.
It's a risky business.
It's a risky
They
business.
should make a movie called The Risky Business.
Yeah. So do you think gold prices are
Gold may have
high?
turned today. Yeah.
Oh, today? While we were having lunch?
I trade the ETFs, I must
You
admit.
trade the ETFs?
Well, the triple leverage ones, yeah.
Really?
Well, it gives me something to do.
How's that going?
Keeps my finger in the game.
Really? Your finger in the game? That's, boy, all kinds of
Whoa, risky business.
risky business there. Really? So you've been trading gold lately today?
A little bit. like you know what? I'll tell you. Like the dust really had a run.
The dust.
The dust had a run, and
Dust left you in the dust?
They took gold down right to the close, and then today they jerked around a bit and they took it back up. It's almost like one day up, one day down. It's just a little too easy.
Yeah, too easy. How could it be too easy? Okay, so looking at my chart here, you can tell that the... see, I knew that would get Donald's ass in here. Here's the gold chart.
Now what?
Gold's currently at 1461.
Really?
Yes.
Well, that's the spot.
That's the
what
spot.
about the forward
That
month?
hits the spot. The forward month. You mean the third month?
No, they
First
just
month.
rolled over from yesterday.
Yeah.
They rolled over from
not.
December
It's on.
December to February. Okay.
Oh, I'm on the... Oh, I did.
You're
That's
on?
right. I switched to the other one because I was testing the other network. I
Testing.
forgot. Testing. 1, 2, 3. Anyways, how about now? There's the price of gold in real time. The spot price, the contract for differences, 1461. Now, here's the interesting thing.
First month though, the contract month is I think 469, 470.
Well, how about that? The future price is higher than the current price.
Is that called contango or backwardization?
Contango.
Thank you. But I bet you a lot of the people out there never heard of contango. What about you, Donald?
Yeah, do you know what contango is, Donald?
Contango.
There you go. Oh, now you're
Moon
No, no, no.
You
River.
need to go here, Ed.
Okay, so we're looking at the charts here and the indexes. You can see that it's
What?
just an ugly
What
day
the
in the cannabis space. The large cap index is down 2.74% to 5675. The small cap index is down 2.69% to 549.12. The venture index is down 2.5% to 318.31. And the CSE index is down 3% to 1382. Do you see hear a consistent theme here? Going down, boy, going down, going down.
You know what?
now.
You know what? This sector.
Suckter. Damn near rector. What? Can't say that on public TV, Edward. Anyways, so as you can see that what do you
call
think?
a priest's home?
What do you call a priest's home?
A priest's home.
A priest's home. Like the home for priests, or like a place where a priest lives?
Place where a priest lives.
Nursery.
Rectory.
Rectory.
That's what it's called.
What?
It's called.
on.
Well, you obviously aren't a priest.
I'm not a
You've
priest.
never lived at a rectory.
No, I've certainly never lived at a rectory. I can assure you of that.
No, not a rectory. Rectory.
I don't even know what erectory means. Anyways, let's try to keep the conversation out of the toilet.
Out of the toilet? Jesus.
Anyways, as you can see, the whole large cap index is being led lower by T-God, the green organic Dutchman, down 15 cents to 74 cents. 74
Why?
pence, I almost said.
Why?
Down almost 17%. Well, I don't know. Maybe share structure? Hexo is down off 8% to 269, 24 cents lower. Charlotte's Web has even given up $1.04 today, down 8%.
Yeah.
Harvest Health and Rec, so here's the story that the indexes are telling you.
Every one of those things is red. Look at it. Every
single one. Oh, here we have the only two ones down
Village
in the
Farms.
bottom.
Look at
Which
this.
one? Our top cannabis pick, True Leaf Cannabis Corp, up 1% to $15.97. And Village Farms, having shaken off the albatross called Emerald Health, now free to fly higher into the stratosphere.
Hey, do you think turkeys fly?
Turkeys absolutely fly. Depends how far you can throw one, though.
They can fly.
What kind of turkey?
A wild turkey.
Wild turkey. Wild turkeys can fly better than domestic turkeys.
Yes, because they're wild.
Wild turkey. And I heard you were a bit of a wild turkey.
In my day.
Now, especially
I'm a bit of a turkey neck.
a turkey neck. Gobble, gobble, gobble. Especially when you drink wild turkey. I've heard that's when you're really wild.
That's my fave.
Really? Wild turkey?
Like
shots?
When I like to go in there and they say, what do you want for a shot? I say,
Do you like it with Coke?
wild turkey.
Wild turkey and Coke?
Yeah, Coke's okay.
Keeps you talking anyways.
Are you talking about the liquid Coke or the other
Bolivian
Coke?
variety. Anyways,
What do you call that? Marching powder.
Marching powder, yeah. Or talking powder. Wish that guy would shut up powder. That's what we used to call it. Coffee Mate. Coffee Mate brings back memories. Anyways, I've got Donald saying something in my ear, but he's coming from such a distance. I think that it must be defective technology. Oh, yeah, okay. So we were going to have a conversation about Tesla today. And
let's see if you can break those windows.
let's see if let's talk to Mark Latimer here for a second. See what he has to say about Tesla.
The Tesla Cybertruck is better than the F-150, faster than a Porsche, and you can order the Cybertruck online today at Tesla.com for only $100 US. So that's exactly what I did. In 2020, my truck will be ready, but until then, I can tell everyone just how cool the Cybertruck is. Did you know that the tri-motor AWD can do 0 to 60 in only 2.9 seconds? It has a 14,000 pound towing capacity and a 500-mile range on battery. Of course, what else are they using? On November 22nd, the Cybertruck was launched. If you haven't seen the must-watch video, the truck is polarizing. It doesn't look like any truck on the market. It also performs better. I personally love the design and appreciate the plane-like endoskeleton construction using SpaceX quality cold-rolled steel. The truck is bulletproof for small handheld weapons like a 9mm handgun. This was demoed at the launch using a sledgehammer on the door. I like the adjustable air suspension, which can lower the truck on highway and raise it when you go off-roading. The interior seats 6, and the dimensions of the truck are the exact same as the Ford F-150. Both the height, width, and weight are identical. The Tesla armored glass windows are very, very strong, but not unbreakable. At the launch event, solid steel balls were thrown at the window, and they cracked, but the steel balls did not go through the glass. Elon Musk went to Twitter later to explain why the glass broke during the demo. They say that the door was hit with the sledgehammer first, and then this caused a weakness in the glass. But both doors were not hit with the sledgehammer. Only the door on the left was hit with the sledgehammer, but both windows broke. Part of me feels like having the glass break was planned. There is no such thing as bad publicity. And the media jumped all over the glass cracking, creating thousands of views and impressions. It wouldn't be the story it is today without the glass breaking. At events like this, every detail is planned, and I believe the glass breaking was intentional. It looks like the car was shot, giving Elon Musk a unique opportunity to stand in front of the Cybertruck with what appears to be bullet holes in the glass. It looks like a scene from Blade Runner. Elon is a marketing genius, which is why I said, please take my money and pre-order the Cybertruck. Along with 200,000 plus pre-orders and counting, the demand for this beauty is high. The stock is currently at $335 per share with a market cap of $60.476 billion with a 52-week high of $379. And the 52-week low is $176. Analysts say Tesla is a buy, and if $335 a share is too much for you, maybe you might be better off pre-ordering the truck. The Tesla Cybertruck Tri-Motor AWD won't be ready until 2020, and you can cancel anytime.
And do you think they have 3 motors in the Tesla because they're shitty motors and they need 3?
No. That's listen. You turn those babies on. It's maximum power immediately.
Yeah. Did you see the video of the Cybertruck dragging the F-150?
This is.
And it
listen,
made Ford so upset that they publicly challenged Tesla to a public dragging match of the F-150 versus. And I thought, don't they understand the simple physics of the efficiency of electric motors versus combustion motors? Like, what? That's a fool's errand. Like, what? Under what circumstances could those conditions be reversed? Under what fucking reversal in physics could the F-150 pull the Cybertruck unless the Cybertruck was turned off and maybe had rocks attached to its front, or it was on skidders. Anyways, so that's
well, let's see what happens.
and here's the thing: like, if you only put $100 down to have an order for a Cybertruck in, what percentage of the 200,000 orders do you think are just a bunch of wankers wanting to brag at the bar that they've ordered a Cybertruck and they'll be one of the first to have it?
You know what? It might not be a bad ploy. Look at Bitcoin. You could have bought Bitcoin originally for virtually nothing, and now it's thousands and thousands of dollars.
What you would have had to hang on through several
This ain't Bitcoin, though, is it?
stomach churning. Yeah, exactly. This thing's there's not much risk of this appreciating in value after you take delivery of it. Unless, of course, Tesla goes broke and they stop making them, in which case they'll become collector's items. Tesla hasn't really done a great job of making money. They've reported a quarter of profit.
No, but you know what, though? The stock was $180 probably 6 months ago.
Then
And
what?
looking like it was going to fall apart. And you know what? It's doubled. It was the best performing. This was a month ago. They said the best performing stock on the NASDAQ was Tesla.
So that's
Much to the chagrin of all the naysayers and the people said this is never going to work.
I was a naysayer. I still am.
Well, I heard you ordered some of these trucks,
No.
Cybertrucks.
Yeah. Of those 200,000 orders, 198,000 orders were mine.
And the other two are
stuffing
Marks.
the market. The other 2,000 were Marks. That's right. We're trying to make Elon look good. We're concerned with the fact that every time we see him get high, he kind of stops
They
making sense.
tossed that rocket that window like they knew it was going to break.
Well,
You know.
that's entirely possible. So cannabis, yeah.
What do you think?
I saw an interesting piece. Well, look at weed. Let's look at weed's chart.
Okay.
X of the large cap. And do you know there have been a lot of money managers buying weed in Canada? Like, I mean, I don't mean to smoke it, but that the actual stock. So there's a pretty serious conviction among certain parties that wheat canopy growth has been seriously oversold. And if you look at the chart, like let's go down right in here.
Okay.
We're looking at the chart, so look at these last candles, Ed, on the screen here.
Yeah. There's a 6-month chart.
No, we're looking at the the 1 month chart here. See, there's those. Tell me about those last 3 candles.
Who's controlling the chart right now?
Me.
Okay. Yeah, look, you know what? There's been so much damage done. If you just sit back and if you're a shareholder, chances are you're underwater unless you bought it real early. But if you've held it that long and you've gone from X to say 7X on your money and you didn't take it then, why would you take it now? You're now at the point where the market is so bad that it'll force you to sell because it'll drive you crazy. Because you rode it all the way up and all the way down, and now you're waiting for Godot. You're waiting for someone to say, no, it's going to go back. But I don't know. I just don't see it. Cheeses. So I'm in the camp that was a sharp cover, a sharp short cover rally.
A sharp short cover rally, as opposed to a blunt short cover rally. Nav Dhaliwal was here from Supreme Cannabis. So here's that conversation. I'm joined now by Nav Dhaliwal, who is the Supreme Cannabis CEO. Nav, welcome back.
Thanks, James. Always good to be here.
You bet. Nav, lots of big news in Supreme's universe. You hired a new chief operating officer.
Yeah, so John Grease, we're really excited about that. So he comes with 30 years of CPG experience with big companies such as Frito-Lay, Nestle, PepsiCo, Canada, and US. But I would say the more exciting part for us has also been in the cannabis industry in California. So, sometimes it's a risk when you're bringing on people from CPG. They're used to normal markets, mature markets, whereas, we're still building an industry. So some of that comes with that combination of experience, we think it's going to be a very valuable addition to our team.
Sure. And then actually, I want to talk about the $90 million corporate credit line first and foremost, because that's an impressive coup in this market. Tell me how that came together and some of the hoops you had to jump through to make that happen. It seems like November 14 is not the most intuitive timing for that, according to what you would expect in the investment and climate that we've been in the last year.
Yeah, so I think a few comments there. Number one is, it's something that we had provided guidance that it was an objective for the company, and we achieved that. Two is, I think, in the current state the capital markets are in, with equity just being vacuumed out of the market, I think is a key accomplishment and really sets us apart in a certain manner because, the company's creditworthy. So this requires, assessment in terms of business plans, forecasts, and so, being creditworthy with equity markets retracting, that's a key step. And I think lastly, I believe we were the first company, post some big regulatory issues in the industry, that we went through a complete rigorous third-party audit on compliance with Health Canada requirements. So for us, in terms of just the regulatory aspects of our operation, our business plans, assessment of management, and just generally being capitalized in the current state of the market, it's a big validation for us, and I think it really sets us apart and puts us in a rare group of LPs that have Tier 1 debt.
Well, you bet. You won Brand of the Year at the Canadian Cannabis Awards. What brand won? The 7 Acres brand?
Yeah, so that's 2 years in a row. 7 Acres won Brand of the Year, and I think very well deserved. It's a, the company. We believe the reason why the brand is so powerful is just in terms of the passion of the people that produce the product, and just a general belief in the ethos of it. And I think even more so is the success of our Jack Hayes strain launch. So it's showing how we can carry over that marketing ability, that brand building ability to new products and new product launches, which is you're seeing in the market is becoming absolutely essential. The consumer, at the end of the day, it's a consumer market, and if you don't have new and attractive products that consumers are demanding and being able to package it, brand it, and market, that's something we think always has set us apart.
Wow, impressive. And then you also, in your last financial, you announced 122% year-over-year net revenue growth. And so it would appear that financially you're also executing rather well on your building of a credible revenue package.
Yeah, so I think, thanks for pointing out the positives. Year over year, it looks good, but we had a 40% decline in revenue quarter over quarter, which you have to expect that in this market. We're still building a new industry, but I think the key stat is it's 33%, on average over the last 4 quarters. So in terms of the trend, we're experiencing great revenue growth, but also we're seeing a significant increase in our CPG revenue. And a key milestone for us is come January, we have the ability to put out all our product in CPG and in the brand. And I think what you're seeing in the market is a significant decline in the B2B market, the pricing, just the demand for it. So showing that you have to be a CPG company and you have to have strong brands, and that's how you're going to protect and likely increase margins over time.
Sure. Do you think that the Canadian Cannabis 2.0 CPG market is going to add to the overall revenue picture for the entire industry, or do you think it's going to take away from just the premium dried flower market that we're in now?
So I think in terms of looking at the aggregate market size, what's really going to add to it is just more distribution. I think that's obvious. You need more places for consumers to buy product. I think 2.0 should bring in a lot of novel consumers, but I think you should also expect big challenges, just as you had with the rollout of 1.0. So we see the flower market continuing to grow. In terms of relative percentage, you see a decrease, but you even see this in the U.S.
Right.
You see some consumers transition into more flower convenience products. So you're seeing pre-rolls emerge as the second most popular product in the country, which we see as really a flower convenience product. So overall, we think you're going to see a lot of challenges with 2.0. But in terms of our focus, we're still big believers in the flower market, flower convenience products, and in terms of 2.0, we're making a big bet in terms of vapes. It's going to be a very competitive category, but a big one, and so we're very confident of our partnership with PAX. We're one of 5, and then we have quite an exciting strategy coming on the concentrate side of things. So you'll see, small batch, limited drops. You'll see some exciting marketing campaigns around that, or educational campaigns. So, we're pretty excited about that rollout.
Sure. You're still focused on producing all of your cannabis in Kincardine, Ontario? For the most part?
So for the most part, in terms of our flower products, yes, that's our primary production site. And then just recently, about 5 months ago, we announced the acquisition of a company called Blisco. So when it comes to our oil products, we produce those in Langley, BC. And coming into the new year, you'll see that starts contributing significantly to earnings. Just even last quarter, did just shy of $1 million in revenue.
Do you think that the competitive environment for all these new products is going to be like a case where, we're almost suffering from oversupply of dried flower products across the board? Are we going to suffer from an oversupply of, for example, vape pens and candies and all of this stuff?
Yeah, so on the flower side, I think it's too early to say if it's oversupply. Yes, supply is definitely catching up, but distribution is not built out. So without the, it's kind of, one builds out and it maxes out with supply, but until you have, real distribution built out, retail built out, like in Ontario, probably at a couple % of what it should be at, right? So that still needs to be built out. In terms of, the flower side of things, we still see that market increasing.
And the black market has, determined, or has proven to be a little bit more resilient than everybody thought going into this first year of full cannabis legalization. And Hexo's responded by rolling out this low-priced product, which obviously is going to eat into margins and probably eat into consumption of their more expensive products. Do you think that that is a sort of the reality of the runway that's ahead of the whole industry in Canada going forward? Is that more LPs are going to have to introduce lower price stuff that can compete with the black market? Or do you think that the product variability is going to be the silver bullet?
So I think pricing is just one component. The informal market being resilient, shouldn't be unexpected. At the end of the day, this is a consumer product. Consumers will make the choice. And if consumers are, in their perception, finding a better product at a better price, they're going to buy that. They're comfortable with that channel. So price is just one component. I think if you have inventories building out, dropping price, should theoretically help move that product. But in the grand scheme of things, if you want to bring consumers into the legal market, you have to produce a quality product that's fairly priced with, a great brand promise around it. And, there's still a lot of work to do. I think there was a lot of assumptions made about this consumer, not recognizing it's a very discerning consumer. And the informal market has produced a very quality product for a long time. So as a company, we really respect in terms of the history of what's got us here, and in terms of having a respect for the plant. So I would be very concerned if I had millions of square feet of greenhouse and now you see the market turning and these prices are going to be cut in half, 75%. So, our view has always been focused on what's that end product we want to produce, and, do we have enough demand to sell it? And so we feel confident about where we're at right now, because our premise from the beginning, we've been saying this for years, we haven't changed this, is this consumer is discerning. They want a good product, they want it at a good price, and they want the brand to stand for something. And I think we've accomplished that.
There was a time when you were actively developing production in Lesotho, and I haven't heard that mentioned in a long time in the context of Supreme. Is that still something that you're chasing?
Yeah, so overall that project's progressing quite well.
Oh, okay, great.
I would say, we've been very impressed with the team there, especially for that part of the world. So in terms of an update on that project, the EU GMP ready facility, it's designed for those requirements, is near complete, and we expect consultants from regulators in the European market to be there early spring. So the thing is, it takes time. Building out a large production facility, cultivation, then extraction, all to EU GMP standards, and then having it accredited takes time. But once that channel opens up, that's a really attractive asset for us and long-term supply.
You bet. All right, Nab, that's a great update. We'll leave it there for now. Thanks very much for joining us today.
Thanks, James. Always fun to be here.
Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at midasletter.com. And we're back.
Well, that's very interesting, isn't it?
Supreme Pharmaceuticals.
That's one of the first ones, isn't it?
That was actually, they didn't get their license till 2018, I believe it was. 2017, maybe. I'm confused.
Yeah.
Anyways,
You're confused.
Anyways, so, gold market.
Gold market, actually having a good day today.
Coal market?
Coal market?
No, coal.
Carbon. Carbonic.
The carbonic marketa.
The marqueta?
Carbona marqueta.
When you go to the marqueta, you want to get a paqueta.
She's a beautiful girl.
She wants to get a little paqueta.
She's extraordinary.
Okay.
So let's see. Now, to continue on the theme of automobiles and cannabis, not driving automobiles under the influence of cannabis, but rather smoking cannabis, and as a result of being high, buying an automobile. Alessandro Bruno is going to give us his example of just exactly how that can happen.
Okay.
In the investment climate right now, I see a lot of uncertainty. We have interest rates that cannot possibly be sustained. And these interest rates, the low interest rates, have been the fuel of the markets both in North America and in Europe. And now the question will be how to move forward. Where will interest rates go? And any move up could cause a major catastrophe. At the same time, any move down could signal to the world and most investors that the powers that be and the markets do not feel that the economy is strong enough to handle an increase in rates. So we are in a bit of a catch-22 situation. In other words, to put it, the worst case scenario, the risk of recession is real, and the risk of a major stock market crash is real. It's simply we're standing on top of a precipice and the foundations are starting to shake. On top of this, we have a variety of international risks that are increasing and seem to have no end in sight. I'm talking about the wave of protests which extends from Latin America, and it seems like every day a new Latin American country begins a series of protests. The latest being Colombia, which was until recently one of the top performing economies of Latin America. And we also have protests in Chile, for many years the top performing economy and one of the most stable countries of Latin America, with protests emerging over a WhatsApp tax. In other words, the government needed to tap into the most vulnerable sectors of the population even to make enough money. So, and then of course we have the protests continuing in France, though they're not reported very well, and the overly reported protests in Hong Kong, and then of course the Middle East with Iran now joining Iraq, Lebanon, and so on. In other words, this explosion, this fire of protests could spread easily, considering the tensions that exist in Europe and North America as well. So investors should look at what they can do to protect their assets, to protect their investments, if they still want to remain in the stock market. That is, if they don't want to go into gold. Well, I suggest a Machiavellian approach. In other words, think very realistically, very brutally. What's really happening in the world? What's one of the underlying cause beneath these protests and which many economists have warned about? Well, it's the increasing income gap between rich and poor. We essentially have a middle class that's disintegrating in two. A small part of that middle class is becoming millionaire, is joining the millionaire class. The other larger part is falling below middle class income levels. So the middle market, which represents really the majority of stocks and companies, is eroding. And the safest bet will be to invest in companies that cater to either the very rich or the very poor. Now, the safer bet of those two is to go with the very rich, because the market for luxury goods is only going up, and even if it falls in one country, there is another one. For example, if it falls in North America and Europe, China is rising very quickly and consuming and able to absorb a lot of that luxury market. The stock I would like to talk the most about, the one that really struck a chord with me, also because I happen to like the subject very much, is Ferrari, the manufacturer of sports cars. This company has huge profit margins, something like 22%. Compare that to the profit margin on a Ford, which is 1.5%. Moreover, Ferrari is an aspirational brand. It is the brand that millionaires buy when they want to show off that they are millionaires. There's no shortage of demand, in other words. They tend to make fewer cars than demand requires. So there's always a backlog of production. And if you order a Ferrari today, you may be lucky if you get it next year, if you're a first-time buyer. So, and then consider just the residual value on some Ferraris of the past. Some of them are worth more than the most expensive artworks. So I would urge investors to consider this kind of strategy and to look at Ferrari much more than as a car or even a luxury brand. Some catalysts for the brand coming up in the next year. First of all, in 2019, Ferrari introduced 5 new models. That's a record for the company. And one of these 2 models, the newest one to be introduced, called the Roma, is only costing $200,000. Now, that price is expensive enough to be a Ferrari and to yield the kind of profit margins that Ferrari is used to. But it's also cheap enough to appeal to the customer who would ordinarily have perhaps chosen to buy a Porsche before. So they're entering a new market level, which will only help to increase the numbers of cars sold. In the next year, by 2021, rumors are that Ferrari will introduce an SUV to the market, which will, whether Enzo Ferrari, the founder, will probably roll in his grave, but investors won't be displeased about rolling in the dough because this should boost sales of Ferrari and demand even further, just as the SUV helped Porsche take off in the early 2000s. So we have a number of catalysts for the brand. We have a world situation which is contributing to the enrichment of companies that cater to the rich, luxury brands. And this combination means that Ferrari will be the kind of stock to keep for some time to come. In the same logic, I would also urge investors to consider something like Louis Vuitton, LVMH, which today bought Tiffany's, the famous brand made of the movie Breakfast at Tiffany's, made famous by Audrey Hepburn. Well, that brand, which is an aspirational brand that appeals to both the super rich and the medium and the middle class, because you can buy something small like a teaspoon or you can buy an entire set. The same with LVMH, which is an umbrella for 70 different luxury brands. You can buy a small pen, perhaps a handkerchief or an item like that, which will cost you which costs you $100 or $200, or you can buy major goods like luggage and spend into the tens of thousands. But again, this is one of those stocks and companies that will only get richer in the next few years, given that macro situation I was discussing. And by the way, just as a final point, another company that comes to mind is Gulfstream Aerospace. Now, Gulfstream Aerospace is now part of General Dynamics, one of the biggest military contractors in the United States. So you get a double whammy there. You get the guaranteed defense sector spending into General Dynamics, and considering the general global situation, not only the unrest I was talking about before, but the geopolitical tensions that are rising everywhere, that provides a certain advantage. And then you have the luxury customer, who is interested in buying only the very best business jet, the Gulfstream G series of business jets. And that, just as an example, a few years ago, Bombardier, one of Gulfstream's main competitors, which focuses on a range of products, was unable to sell many of its mid-level or entry-level jets. Customers wanted the super luxury. That market never faded. So it once again is proof of the validity of this approach to investing. So in conclusion, the idea is think of the macro situation and consider this. The world has an income gap problem. Several economists, from the famous Thomas Piketty to Branko Milanovic, another economist with years of experience at the World Bank, have been talking about the significance and the danger of income inequality. Now, this significance, this danger, can offer investors a hint, and a very strategic hint as to where to invest. And investing in companies that cater to the rich might be the safest thing you do with your money.
Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at MidasLetter.com. That's all for now.
Hats off for now?
See you tomorrow.
Hats off for now.
Hasta mañana.
Hats off for now.
Ciao.